Back at it here once again. It's about that time of day again here, folks. It's Thursday evening. It's June the 27th, 2019. My name is Joseph, by the way. And as always, this is your nightly newsletter. Now, as always, guys, don't forget I help traders find high-quality, dependable, reliable trade setups using a very simple three-step trading strategy that we teach and trade together every morning in our trade room. But my job tonight's a little bit different. My job tonight is extremely important. My job tonight is to identify the best levels, the best setups, the best opportunities we're watching for tomorrow. That's Friday's trading session. And tonight we're going to grab some oil, some S&P, some Nasdaq, some gold, and of course we can't forget about that mighty euro. I'm going to jump into oil here first tonight because oil, like a lot of these markets, is battling through some consolidation as we go into that triple threat that comes tomorrow, end of week, end of month, end of quarter. Let's talk about oil because oil is really a byproduct of all of these markets right now. Range-bound markets, lots of traps to fall into, but some great setups if we know what we're looking for. Let's grab this oil chart real quick, jump into this black gold, this Texas tea. The first thing we notice here on oil is we have a strong break up into a sideways chop. This is a range-bound market. In a range-bound market, I want to buy low, I want to sell high, and I want to avoid the middle of that trading range. I want to buy low, I want to sell high, avoid that middle. How do we do that? Well, I'm going to look for one very specific setup, right? Buying off the low. I've got a couple support levels down here, you'll notice. And I'm also looking for a selling opportunity as we go higher, but it's going to be a little more difficult to be a seller on this market because of the overall bullishness that we see. So I'm looking for buys off the low. I'm looking for a sell, a very specific sell setup off the high, but obviously I'd be lying to you if I said I wasn't looking for a possible breakout here as we go higher here. When is it safe to buy the breakout? When should I avoid buying the breakout? I'm going to break down all of those details in tonight's video, so make sure you stay tuned for more on that. Over on the S&P right now, S&P is also in a range-bound market this evening. This one's a little bit tough to pin down, but if you look back in time here, right, we started off that range yesterday, and it looks like we just keep getting drawn right back out into that trading range right now. So range-bound market on the Emini, there is definitely a bullish tone to it, right? You can definitely see we get some higher lows. We're getting some higher highs here. I know that big guy back there is obviously there, but we know we're range bound. We know we've got a bull bias to it. And much like the oil right now, I want to buy low here tomorrow, looking for a chance to buy that dip. I'm also looking for some specific setups to sell off the high once we get that measured move. And also, what if we get a big, massive short covering rally? Because this could easily spike right back up and make a big rally tomorrow as well. We got some big news tomorrow at 8:30. What does it take to be a buyer up here? When can I feel safe buying it as it goes higher? When should I sell it as it goes higher? We're going to talk about and answer all those questions tonight on this video. Over on the Nasdaq tonight, Nasdaq's a whole lot easier than the S&P right now. Also range bound, consolidated, right, going sideways. There's a bull market into that trading range that does give the bulls that edge. Anytime I have a range bound market, I'm buying low, I'm selling high. And again, because of that bull bias, I've got one very specific pattern I'm looking for to buy off of that low. I'm also going to look for a sell setup off the high, but obviously with that bullish bias, I've got to be careful. We'll dig into more details on those specific setups we're looking for tomorrow. And then how do we get to that measured move? Because I'll tell you, that measured move is just begging to be hit up there around that big number 77.50. How do we get long, right? When is it safe to be a buyer up here? How would I get in up here, right? Because if the price jumps up like this, I don't want to buy into that overhead resistance either, do I, right? I don't want to chase the market there. So we'll talk about how to buy it low, how to buy it high, how to sell it, and of course, everything in between here on the NQ. Great chart there on the NQ. How about that gold? Boy, gold looking beautiful, rotating back and forth inside of that range. We talked about this obviously in last night's newsletter. It was a range-bound market yesterday, and we're looking for ways, of course, right, to use that pendulum swing, right, to buy off of that low. Here we are now, back into that trading range. You can definitely see we're still back inside that range here, but now we have this bullish tone to it, right? What is that, guys? That's a spike in channel pattern right there. Lots of important clues on this chart. First of all, what does the range tell me? Range tells me to buy low. Range tells me to sell high. I have a slight bull bias to it right now, so obviously buying low will be a different strategy than selling high. We're going to dig into that tonight on the video, but I'll tell you, this chart right here, right, that channel, that spike in channel is possibly the biggest clue we have on the chart, and it really helps me get fine-tuned on exactly where I want to be buying this market tomorrow morning. And obviously too, right, as the market goes higher, how do I sell it? And when is it safe to be a buyer if the market takes off to the upside here? We'll talk about when it's safe to buy high, because obviously, right, we don't want to buy the high of that range. And of course, last but not least tonight on the mighty euro. Euro is all coiled up right inside of that trading range, a range-bound market. This one's very much neutral, as you can see. There's a little bit of a bear bias, as you can see here, but you look a little bit further and you can easily see a bull bias there as well. So we're definitely neutral right now on that euro. The neutral, of course, right, the neutral mindset on this market tells me, once again, it's a range-bound market, right? I'm going to buy low, I'm going to sell high, avoid that middle. We really have the pick of the litter when it comes to the euro tomorrow, just because of the neutral bias to it. I've got a couple levels though, I'm watching that pendulum swing, that measured move, that are really going to help me kind of fine tune this strategy. And we'll talk about buying low, we'll talk about selling high, we'll also talk about what a breakout might look like tomorrow on this euro, because this triangle, right, these higher lows and lower highs, they always tell me to expect a very specific scenario, and we're going to take a look at that on the euro tonight. So lots to cover here tonight on this video. Euro, gold, Nasdaq, S&P, crude. We have a triple threat coming at us tomorrow, end of the day, end of the week, end of the month, end of the quarter. I got a lot to cover here tonight. I got a lot to share with you guys here this evening. But before we jump into those charts though, I want to make sure you never miss another great video newsletter. You may not be aware of this, but right before I publish this video every evening on our YouTube channel, I send an email out to our best clients on our mailing list, and I want to make sure you get that email, because then you'll know exactly when it's time to get ready with our nightly newsletter. So to join our mailing list, to make sure you're the first person to reach, right, to get that heads up every evening, join the mailing list right here on the blog at Sideways Markets. I need your first name, I need your email address, and then hit that subscribe now button. And then one common mistake people make is once you hit that subscribe now button, you've got to go in and check your email, because I'm going to send you a welcome email, and inside that welcome email there'll be a verification link that I need you to verify your inbox to make sure I have the approval to keep emailing you this every evening. And also I'm going to send you a lot of free resources so you and I can get the most working together every evening on this newsletter. And don't forget, sometimes that welcome email, sometimes it gets stuck in your spam filter. So if you register for the mailing list and you don't see the welcome email, check your spam folder, check your junk, your promotions folder, right? Any other miscellaneous folders that are out there these days. And if you have any problems, just pick up the phone and give us a call here in the office, and I'd be happy to answer all your questions and get you on track. Now, one more thing before we jump in. I need your help. I'm always trying to make this the very best place to learn and earn every evening. Some people say I'm obsessed. Some people might say I'm obsessed with making this newsletter the very best it can be, and I rely on you and your feedback to help me get better every day. I have a question for you real quick. I need a few minutes of your time in the comment section below. What's the biggest obstacle standing between you and becoming confident and consistently profitable? We're all on this journey to become confident, successful traders. We're all just at different places on the journey, right? Some of us are just beginning. Others are grizzled veterans, right? With calluses on our palms, right? Because of all the mousing back and forth. The bottom line is, wherever you are on your journey, what's the biggest obstacle standing between you and being confident and consistently profitable? Is it software? Is it data? Is it technology? Is it psychology? Is it strategy? right? Maybe it's coaching. Is it one-on-one time? What's the most important thing in your world? What's the biggest thing that I could do every evening on this newsletter or as a trading coach overall that would make your life easier, make your job easier, becoming confident and consistently profitable? It would mean the world to me if you left me some feedback in the comment section below, and I appreciate your time on that. And while you're down there, don't forget, if you watch this video every evening, give me a thumbs up on this video tonight, because I'll tell you, that really helps me to expose this video to other new traders. So give me a thumbs up if you tune in every evening. If you find value in this newsletter, I always appreciate that thumbs up. Subscribe to our YouTube channel so you never miss another great video. And don't forget, if you have any questions, you can always call me in the office. Phone call? Really? The telephone? I know. I'm gonna date myself here real quickly. I actually talk on the telephone. I know it sounds shocking. They still work for talking back and forth. You can actually use a phone to call me. I'll pick up the phone, answer all your questions, whether you've got questions about data, brokers, charting software, trade management, trading strategy, or maybe you've got questions about a free pass to our trade room or our free trading classes, right? Grab that toll-free phone number, use that live support tool in the upper right-hand corner, call me in the office. I'm so excited to answer the call. I love talking to you guys on the telephone. I know, right? Who would have thought they actually allow us to talk back and forth? You don't need to text, right? Or send emails. Just call us in the office if you have any questions. But for now, though, let's get to work, can we? Can we get to work here tonight, right? I'm sorry for all the chit-chat here before we jump it in here. Let's jump into the calendar here for tomorrow. What do we have on the schedule for tomorrow's trading session? Tomorrow is a triple threat, triple whammy, right? Whatever you want to call it. As I mentioned, right, earlier in this week, right? Every quarter, March, June, September, December, right? Here we are at the end of the second quarter. What else do we have? The end of the month, right? End of the month. Last trading day of the month of June. And oh my goodness, again, there's more, right? Tomorrow's the end of the week. So we have the end of the week, end of the month, end of the quarter. I've been talking about this all week, right? We're expecting to see what? We're expecting to see increased volatility. So volatility should continue to be elevated tomorrow. Tomorrow is a Friday, of course. And of course, anytime we talk about a Friday trading session, we always talk about early in, early out. Early in, early out. Get to your desk early tomorrow. And I know how difficult this is. Trust me, it's not easy to close up shop, but hopefully that beautiful weather outside, hopefully, well, if you're in the Northern Hemisphere at least, right? It's just getting warm out here in Los Angeles. Hopefully that warm weather will attract you out of the office and you can enjoy the rest of your day. My definition of success on a Friday morning is getting to my desk bright and early, and I'm out of there by about 11:30, 11:45, 12 o'clock Eastern time. You got to have a really good reason to be trading any of these markets right after 11:30, 11:45. So early in, early out tomorrow. Increased volatility. What about big news tomorrow? We do have big news tomorrow. In fact, if you were to ask a lot of traders, you probably would get the same answer. Tomorrow is pretty much the biggest news of the week, outside, of course, all the other shenanigans, right? The trade war, the interest rates, right? All this stuff that we're listening to right now in the news headlines. As far as scheduled news goes, tomorrow, 8:30, that's called the PCE number, the personal income and outlays number at 8:30. This is expected to be a pretty volatile market moving event tomorrow, which with tomorrow being a Friday morning is exactly what we need, right? We need a shot in the arm early in the market, get these markets moving. Hopefully that number will catch everybody's surprise and we'll get some nice runs tomorrow morning at the opening bell. Speaking of the opening bell, we open up our trade room every morning at 8 o'clock Eastern time and we trade the entire strategy together. Tonight, we're going to go over the strategy tonight. It's a very simple strategy. What's not so simple, though, is applying it to the actual market, and that's why our trade room is such an advantage for our clients. So tomorrow morning, 8 o'clock Eastern time, we'll go over the basic plan tonight, and we'll work on executing that plan with all of our clients tomorrow morning. And one last heads up, next week, it's important that you understand we are going into a very, very different type of week next week. I will not have a newsletter for you guys next week. I'm working on a big website update for schooloftrade.com. I've been doing this, as many of you know, for almost 15 years here at School of Trade. And every couple of years, we gotta kind of pop the hood and get the website updated. Next week, I'm going to be doing that. So there'll be no newsletter next week. I know. Trust me, I don't want to do that either. But if I don't focus next week on getting the website opened up, get it updated, and get it reloaded, you guys won't see any difference next week, right? My clients won't notice any difference, but I'm going to be getting my butt kicked next week with technology stuff that really, to be honest with you, isn't in my wheelhouse. But I'm going to pull the trigger next week, right? Get that website update done next week. So no newsletter for me next week. Now, what I want you to be aware of, though, and obviously for all my clients out there, I'll be with you next week, right? So I'll be available to all my clients. Unfortunately, I will not be here for the newsletter next week. I'll be getting my hands dirty on some technology stuff, and then we'll plan on coming back that July the 8th. So my next newsletter after tonight will be the 8th of July. Now, heads up here. First of all, for next week here, Monday and Tuesday, you've got the OPEC special meeting. Okay, there's an OPEC meeting next Monday and Tuesday. They're going to be talking about sanctions, talking about Iran, obviously talking about, right, all the things right now that have been affecting oil here. OPEC meeting Monday and Tuesday next week. So if you're an oil trader, be aware of that. It is going to be a big part of the process next week. Then be aware, Wednesday, Thursday, Friday, you have a half day in the markets on Wednesday. As you can see, they're closed on the 4th of July. They're open on Friday, but that's going to be another early in, early out scenario. So I wanted to make sure I gave you a little bit of a heads up for next week, because I will not be sending out the newsletter next week. Again, I'll be available to all of my clients. If you want to get registered as a client, right, you can use and abuse me whenever you want, right, during the week, next week. But for the rest of us folks out there, OPEC meeting Monday, Tuesday, and then remember, check your CME schedule. It's a full half day. It's a hard close, a half day on Wednesday, right? It's closed on Thursday. Friday is a full session, but it's the Friday after the 4th of July. I mean, there will still be smoke in the air from the fireworks, for crying out loud. Very important. You be very careful that Wednesday and Friday around that holiday. So as you can see, next week's going to be a good week if you've been trying to find some time to organize your sock drawer, right, or do some things around the house that you need to get done. As I said, I'm going to be working on my website next week, and of course, I would encourage you as well, right, to use that time wisely also. So a little bit of a side trip there, right, for the next week's schedule. I didn't want to leave you guys hanging right ahead of next week as well. Now, let's jump into some charts here right now. Thank you, by the way, for your patience. And I know I'm going to miss you next week, but that's okay. I'll be back. I do these every evening. I've been doing them like this for over 10 years now. It's hard to even imagine how long this newsletter's been going on. And that's, of course, right, that's all because of you guys. You guys tune in every evening, right? You guys give me such great feedback. Okay, charts. We got crude, S&P, Nasdaq, gold, euro. What's happening? What do we know on crude right now? What do we know on crude? Remember, crude has that huge meeting on Monday and Tuesday next week. So is it really that surprising to see oil all curled up in a ball? Not at all, right? Not very difficult to see why now. What do we know right now? What do we know? We know we're range bound, right? We know we're going sideways on the screen. What else do we know? We know that trading range has a bull bias. Okay, what does that tell me? It tells me that I want to be a buyer. I want to be a buyer at support. What else do we know? We also know we have an expanding triangle or an inverse triangle, right? You'll notice I've drawn some trend lines off. Boy, that'd be a great support level, right, to be a buyer on that, wouldn't it? Absolutely. What else do we know? We also know we can take these highs, I can bring it down to those lows. Oh, and ooh, baby, that creates a beautiful hidden channel. And you'll notice it lines right up, right, with that inverted triangle or that negative triangle or whatever triangle you want to call it, right? Those expanding triangles there. Perfect. So we get a lot, right? We get a lot we know about, right? Strong move up. We know that second leg, right? Measured move. And we know there's a big round number up there. Okay, so now we know a lot. There's a lot that we already know on this chart. Bull market into a trading range. There are two basic ways you want to trade a range-bound market. Buy low and sell high. Let's talk about buying low first. Most important thing is I take the size of that range, and that helps me find my buy zones and my sell zones above. I want to buy low and I want to sell high. Now, because the market is bullish, there'll be slightly different patterns to buy low than there will to sell high. And I also want to be aware of a possible breakout going higher. So, for example, how do I buy low? I got my levels of support over here. I know where that area is. Here's what we're looking for. I'm looking for a nice, strong move lower. Now, once we get that strong move lower, you'll notice we're going to be able to probably draw a trend line down overhead. Draw that trend line overhead, and we're going to try to use that trend line now as a key level of support. I call this a two-legged pullback because it's got two legs down, right? That's what creates that trend line, right? My nickname for this one is, what was it? A 2LP, right? A 2LP, two-legged pullback pattern. Okay, now this may not happen, right? We may end up chopping around here for a while, right? And we may not get that pullback for a while. That may not be the case. So another option would be, if we keep going sideways here, right, would be let's let this market go lower, get that moving average to come over, right? If I can get this market to push lower again, I'm at some key levels of support here, right? I want to buy at support. Now, let these sellers try to take it lower. Then wait for them to try to sell that pullback. What's going to happen is the bears are going to try to sell that pullback off the moving average. Okay, the problem is the market's not trending. The market's range bound, right? In a range bound market, there's a big magnet, right? There's a big magnet that draws the price back into the range, right? Both above and below. So I know if those sellers try to sell off that moving average, I know where their stops are, and I'm looking to buy right into those stop losses. Okay, we call this a failure pattern. Now, oftentimes this failure pattern will pull back right away and give us that pullback to the moving average, right? A lot of times the failure pattern will end up pulling back to the moving average. Failure into a pullback pattern. Okay, so two patterns I'm watching for right now. One is going to be that two-legged pullback. Again, imagine now that trend line, right, coming down overhead. We go up over and use that trend line to buy, and again in the support area I've marked up below, two-legged pullback. Or maybe we don't get that two-legged pullback, we chop around a little bit, we run lower, moving average comes over, sellers try to sell into it, it's a failure setup, right, into a pullback setup as we go higher. Okay, those are three different patterns looking for to buy off this low. As the market goes higher though, how do I sell this market now? This is where the bias, right? This is where the bullish bias comes into play, right? Now remember, if we go lower, I can buy into a failure of the sellers. Can I do the same thing going higher? I can't. And here's why. Because the buyers aren't going to give up that easy, right? The buyers are probably going to try a couple times, right? They're going to try once. They're going to try twice. Then you can sell it. So you just can be a little more patient, right? Price goes down, it's bullish. I can be a little bit more aggressive, as you might say, buying into seller failures because those sellers aren't going to throw the kitchen sink at it. They're not going to have the confidence. But if the market's already bullish and we run higher, yeah, I got to be careful. These buyers, if I try to sell into a buyer failure, there'll be more buyers waiting right there to buy more. Right? But if I give them a couple tries here, 1 and 2, and then sell, that will dramatically increase the odds of my success. Right? That's called a nested variation of the failure pattern. Right? So failure pattern off the low, nested failure off that high. Now, how do we buy up here? Could we buy up here? We can, but we have to start off with a strong move up. Now, this might happen later on in the process. It might go sideways here and then make a run for it, right? Or it may just jump at the opening bell, right? To be honest with you, it doesn't really matter. What we know is, though, we know one thing for sure. We have this strong move up. We have a measured move up there. Okay, measured moves are tough to break through on the first shot. So if we make a run higher here, I don't want to buy up here, right? Because what am I doing? I'm buying high. And there aren't going to be that many buyers that are confident buying that high. No professional buyers, that's for sure. So here's what I want to see. I want to see a strong move up in this one very specific pattern that I always look for, and it's called a two-try breakout. Strong move up, that's the key. Now, one try for the bears. Here's the kicker. Watch closely here. Higher high, lower low. What's happening is the higher high tells me the sellers have tried once to sell it. The sellers have tried twice to sell it. I want to buy once I exhaust those bears. Because again, you're top of the range. The bears will try to sell it back down again. Okay, so I want to let those bears exhaust themselves. But here's the real secret to this. Because we are running out of open space overhead, I look for a lower low on the opposite side. Why? Because the danger right now is I don't want to buy into that resistance. And what's the best setup to avoid buying into a level overhead? A trap setup, right? Traps are simple little, they're cute little patterns, but man, don't let how small they are fool you. They are very powerful in the right situation. Right? It's called a two-try breakout. And because of the circumstances, because of this resistance overhead, I'm looking for that trap. All right, guys? So a recap here, we go up 1, 2, and then back down in. Or we go up, new higher high. That's the giveaway. Right? That's the giveaway. Higher high. Now, give me that trap before we get to that measured move, and we're looking good for that trade from there. Now, once we get to the measured move, we oftentimes will pull back, get a nice failure off that moving average. It's that same basic pattern that I talked about down here, right? Where it's a failure into a pullback and then back up in again, right? Remember that pattern we talked about down there? That same pattern will likely happen once we get the measured move. So keep an eye out for that. All right, guys? Great stuff there on the oil. Don't forget, stay away from the middle, right? Stay away from that middle. Buy low, sell high, avoid the middle. And again, next week, Monday, Tuesday, we have that OPEC meeting. Okay, you want to learn more? I hope you do. I have so much more I want to share with you tonight, but I've got to keep going. Right? I haven't even touched the S&P yet, and I have a lot to cover there as well. So here's what I want to do. I want to give you all the terminology, all my favorite patterns, how we use the charts with a three-step strategy. I want to give you a deeper dive. And to give you that, I'm going to put a link in the upper right-hand corner here for a free trading class. Right? Our free courses, people love our free trading classes. If you're brand new to trading, or maybe you're just sick and tired, right, of not being that consistently profitable, confident trader that you want to be, grab that free course, because the free course will teach you how I look at the markets, which as you can see is a little bit different. I'm very much self-taught, right? I, of course, like everybody else, stand on the shoulder of giants, but most people tell me the way that I look at the charts, the way that I draw my ranges, the way that I use channels, my setups are a little bit different than you'll see in most people's stuff, right? And so I think you're going to love that free trading class. So grab that free class, and don't forget, I'm going to send you a welcome email when you register for the free class, and sometimes that welcome email gets stuck in your spam folder. So when you register for the free course, check your email, because I'm going to send you the first lesson, right, in that free trading course. And again, sometimes that email gets stuck in your spam filter. Let's go to the S&P right now. S&P is also a range. Now, I got to be honest. The S&P, I was debating on this of whether or not I wanted to call this a range-bound market. But for right now, I think you have to call this a range. We spent most of the latter half of the morning, yesterday morning, inside that range. And you'll notice we came right back into that range for pretty much the same time today. So it looks like that range is going to be the most important factor here for tomorrow's trading session. Now, this does have have a bullish tone to it, which is pretty much capped off by that strong move that we saw right out the gate this morning. Anytime we see a strong move like that, we know those bulls are going to be trying to get up to that measured move. So we know where they're trying to go right now. Now that measured move is a big important piece of this puzzle because that we already know. We know that measured move is up there around that 29.39, 29.40 area. That will be, just like on crude oil, a major level of resistance. What else do we know? We also know we got that trading range, right? And that range, the size of the range tells me where my buy zone is, where my sell zone is, right? So I know that buyers will try to buy low. I know that sellers will be trying to sell high. And I definitely want to stay away from the middle of that trading range. What else do we know? Trend line. Right? Trend line. Now, we always kind of joke around by saying a support trend line in a range-bound market is like bear repellent, right? It's like bear repellent. But you should, bring some trend lines with you when you go hiking, right? Keep those bears away. But the bottom line is that this trend line might just be why it definitely feels like there is an overall bullish tone to this market right now. So I really got to be careful being a seller. That's one of the big differences between the S&P and the oil, right? Oil didn't have such a dramatic trend line going higher, right? I can't really justify being a seller up here because I've got this darn trend line there. It's going to be very difficult to get through that trend line. It's not going to be an easy job here for us. So I want to buy. I'd like to be a seller, but I just don't see any easy way at this point in the game to be that seller, at least not just yet. We'll have to wait and see what we see more tomorrow. So first of all, I want to be a buyer, and I really hope that we get a run lower here in the overnight, right? Hopefully we'll get that nice pullback lower. And so I want to be a buyer down here, right? I want to buy nice and low below that trading range. There are two basic patterns that I'm watching for. One would be that two-legged pullback, draw that trend line over, pull back, get up and over, and use that trend line. Okay, that's always one of my favorite ways to trade ranges. Oftentimes when ranges come up, they'll go down, up, and down, right? That trend line comes over, and now we use that trend line on the opposite side for that two-legged pullback. Or, right, maybe we see something as simple as we saw back here. Right? Strong move down, moving average comes over. The sellers try to sell off of that pullback thinking it's a trending market of some sorts. It's not a trend, it's a range, and we know a range tells us what? We're going to probably go right back into that range. So look for those buy setups here using a seller failure right into a bull pullback on the way back higher. Right? These are very, very common setups in range-bound markets. Again, let these sellers try to take it lower. Get that moving average coming down. Let the bears try to sell off the moving average. And once we see them commit to that short, then we know where their stops are, and I can buy right into those stop losses. Now just remember, you want to buy below that range. So if you don't get on the failure, don't chase after it as it goes higher. Wait for that pullback, right? And that pullback will be your next best option here, right, for the trade going in. A lot of traders tell me they don't like the failure because it just feels very awkward, and I understand, but you have to remember it's a range. It's not a trend, right? There's a big old magnet right in the middle of that range, right? And they're going to drag this thing back into that range. So don't let the fact that you're buying as the market goes down, right? Don't let the fact that you're buying as the market's going lower. Remember, that's technically how you're supposed to be trading, right? Supposed to be buying as the market goes lower. So keep your eyes on that pattern down below, right, that range tomorrow morning. Just make sure you promise me you won't trade inside that range. Now, what as we go higher? We know where that measured move is. We've got the measured move up there. We also have, right, that prior key high up there too. So there's going to be a lot of profit taking up there, probably a lot of sellers that will try to call a top. You could even say this is one big range right there, right? So we definitely know there's going to be some resistance up there. So let's talk about this. First of all, how do we buy this market? buying it's going to be tricky because you got that measured move right in your way. So what do you think is the best pattern for that? Strong move up, 1, you got it, 2, and then trap. Perfect. Now, why do we want to trap low? We want to trap because we don't want to buy high. We know where they're trying to go, right? That is major resistance. That is where we expect traders to take profit. We expect buyers to become sellers. We expect sellers to initiate new short positions there. We don't want to be buying into that area. So as the market's going higher, smart traders out there are going, just give me a trap pattern and I'll buy that trap. Right? Give me a trap and I'll buy that trap. You can see it very similar here, right? We go up, they try 1, they try 2, and see what's happening right there, right? They're buying that trap. That's a little bit too close to the range for comfort, but that's the general idea, right? We run up, the bears try once, the bears try twice. The key is that higher high because the sellers want to sell high, right? They'll try once. If that doesn't work, they'll try again. Right? If that doesn't work, they're going to bail. I want to make my entry, though, that trap because I don't want to buy high. Now, how about a breakout going higher? What would a breakout look like? A breakout. 1, 2, 3 breakout. Ready? 1, 2, 3 breakout. It's a pretty simple pattern here. It takes a little bit of patience, but how do we know when we can really start buying above that measured move? Because oftentimes what happens is we see a mark up to the measured move. It'll chop around up here. It'll pull back, right? The moving average will come over. The bears will try to sell. And guess what? We'll failure. You got it, into pullback. And we're up from there, right? Again, that trend line, right? So that's going to be another option if we go up to the measured move and then pull back, right? It's a failure pattern into a pullback coming afterwards. But how do we know when it's safe to be a buyer? Ready? 1, 2, 3. Once we see that punch higher, it's all about personality at that point. Once we see that punch through the top, mark up that high, mark up that high, mark up that low, right? And that's going to give us what I call a hidden channel. And that hidden channel now, you're looking for that hidden channel pullback, right? I call this a 1, 2, 3 breakout into a hidden channel pullback. 1, 2, 3 breakout into a hidden channel pullback. Those are some of my favorite breakout patterns. I know, they're not as simple as just buy the breakout, but buying breakouts doesn't work very well in real liquid markets, right? They work in illiquid markets, but then you're gambling. I want to be more reliable, right? More dependable with my setups, and that 1, 2, 3 breakout into a hidden channel pullback. You're buying low after you confirm, right, on that breakout. And I'll tell you right now, I have hundreds of examples of that very same pattern in our free trading classes, right? That 1, 2, 3 breakout. Grab that link in the upper right-hand corner, right? Or grab that big red button below the video tonight on our trading blog. And I swear, if they can get this party rolling higher here, I mean, we've got a big target up around that 29, right, 58 area. If they can send this thing back down again, right, their target obviously is back down to retest that low from early morning this morning. So buyers definitely have that edge. We're looking for chances to buy low right now. Even if the market punches higher, wait for those traps. That way you're on the right side of this market and you're not buying high. Next up here, over on the Nasdaq. Nasdaq looking great in all of its range-bound glory. What do we know right now in the Nasdaq? We know we have a range, and I can use the size of that range to create my buy zones, to create my sell zones, right? You'll learn all about these details and how we do that in our classroom sessions here at schooloftrade.com. So we know we have a range. Range tells me I want to buy low. Range tells me I want to sell high. What else do we know? We know we have a bullish bias, right? There's no doubt about that. That strong bull move before we went into that range, that definitely gives the bulls that slight edge right now in a range-bound market. We also know that tells us that buying low or buying as we go higher will be an option, and really will be what looks to be the only option right now, because just like on the S&P, we can also see a very convincing, right, bear repellent trend line, right, a rising support trend line. That rising support trend line is very convincing. In fact, I think you could probably justify drawing that a few other ways too, right? I mean, there's a couple ways to draw those trend lines right now. I think I've got the one that fits the best on it right now, but I mean, I wouldn't argue with you if you said, no, we're going to draw it like that, right? That could work too. So again, very difficult to justify being a seller on this market until we see something drastically change here on this Nasdaq. So looking at this in terms of a bull market into a trading range, I want to buy low, right? I want to sell high. I want to avoid the middle. The sellers want to get back down to retest that low. The buyers, where do they want to go? They want to go up to that measured move. Now you'll notice the Nasdaq has a whole lot more leg room, right? They got the first class ticket right on Nasdaq. They've got a lot more leg room. They're probably serving some nice entrees in first class for the Nasdaq here on the way higher. Lot more room to stretch out as we go higher here. So what does that mean for me? Well, obviously I'd like to buy a pullback here in the Nasdaq right now. If I can get a pullback on this, I'd love to buy low. Nice little shot lower here. Get that moving average coming over. Get those sellers to try and fail, right? So we can buy into their failure. You can see a great example of that type of strategy over here, over here, over here, over here. You can see lots of examples of these on range-bound markets. So just like we saw before, strong move down, bears to sell off the moving average, and whoops, right, they failed. Again, don't be too spooked by trying to buy as the market goes lower, because it's not a trending market. You're not going with the momentum of the market. You're actually buying at the low of a range, a balance area on a chart, which will drag that market back up into that big round number at 7,700. So I want to be a buyer off of that low. Maybe it is a two-legged pullback instead, right? We'll keep an eye on that. Two-legged pullback up and over, right? Or it could be just a straight failure into a pullback setup, right, for that move going back up, right, into that trading range. Hardest part will be staying away from that middle. You don't want to trade the middle. You can see how choppy it is in that middle. And then as we go higher here, okay, I got to be honest, it looks like we are very delicate. This looks like a paper napkin up there. It doesn't look like these bears, this does not look as convincing as the S&P. The S&P had a number of hits up here that you just kind of knew was probably going to be a pain in the butt tomorrow to get through. The Nasdaq, not only do we have more space overhead, right? There's just more space to play with up here. It just doesn't look like there's a lot of volume up there, right? That big wick's not very convincing. This one pretty much went straight up and then straight back down. And you can see what it looks like for a nested failure right there, right? So if we do go higher here, you know, how do I sell this market? I can't use that same nested pattern. See, it just doesn't fit. You know, and this is one of those times where, I could sell it, but I'll tell you the same thing I tell my clients every morning in the trade room. There's no first place ribbon. There's no special trophy for the most number of trades take each day. The only person that loves the fact that you overtrade is your broker. Okay, your broker's not going to be sending you any special gifts at the end of the year because of all the commissions you've given him or her, right? But choose wisely, right? These are setups right here that, it might be a winner, right? It might be a winner, but it's not a very good setup. It's right into that very convincing trend line there. So although there is potential for this to be a 1, 2, and back down, I'd much rather go up, back down, and pick my battles, right? Pick my battles on a much smarter setup, right? Buying off that low. Okay, so be aware of that. Now, as we break higher here, those same two patterns are in play, right? What were they again? 1, 2 try breakout, strong move up, and this one's classified by that strength, right? And you'll see it, right? You'll see it. It'll look like this one back here, right? It'll be a strong breakup, right? So strong breakup. Remember, the trick is pull back, higher high. Once you see that higher high after that strength, now mark up that low, Look for that trap, and you're good. The reason why you want that trap is because you want to make sure you get as low as you can before we get to that measured move, right? As the market goes higher, buyers are going to resist buying high. Okay, the rookies will buy high, but they're trading with one or two contracts, right? They're not going to mean much. I'm talking about professional traders, right? The guys and gals who are trading big contract sizes, they're waiting for that dip, right? They're waiting for that two try from the bears, and to protect themselves, they're looking for that two try breakout. Now, sometimes we don't get that strong bust higher, right? Sometimes it goes up, it pulls back, and then it runs. Okay, great. Okay, that's fine by me too. Mark up. Now remember, on this one, it's the second leg that's the most important. That's going to have that punch, right? That'll have that, let's go. Mark up that high, mark up that high, down to that low, right? Down to whatever that last low is. And that's going to create your sweet spot. And then we look for that pullback, right, in that sweet spot. All right, guys? A 1, 2, 3 breakout, right, into a hidden channel. Now, sometimes, right, we see these markets just run and then consolidate up here. If it runs and consolidates, right, don't forget, we almost always, when we get to a measured move, we oftentimes see it pull back. The sellers will try to sell it, and we're buying right into those failures for that failure pattern, right? Same idea right there, right? Same idea right there. Okay, that's the same basic pattern right there. Okay, so think about that pattern we saw there, apply it up there, right? So look for that sideways range, same pattern we see as it goes higher. All right, guys, great stuff here on that Nasdaq. Just stay away from that middle, right? Stay away from that middle tomorrow morning. Stay away from that middle. That's the key when it comes to a range. Boy, speaking of ranges, look at this gold. So just to give you a little bit of context here on gold, right? Gold was bearish. Right? Gold was obviously bearish into that trading range. Okay, so in a lot of the sense here right now, there is an overall bear move to it. But look left a little bit further here, and we are very much long-term bullish, right? So you can easily see that, yes, we are bearish in the short term, right? We've got this one hell of a move up here over the past few weeks. So we know right now this could honestly be, looking at the condition of this market right now with that big kind of tweezer bottom to it, right? That big wick at the bottom and the way this market snapped higher. This is one of those, big wick, right? Small body, slingshot type of scenarios. This could result in a massive short covering rally tomorrow here on the yellow metal. We're not there yet to call this a full rally higher yet, but we definitely do know though that this market has turned off of that low, right? And has a nice 1, 2, 3 reversal, right? Mark up that high, mark up that low. Buyers have already bought off of that low already, as you can see. Now, what do we know? We know we're range bound, right? What does the range tell me? It tells me use the range to find the buy zone, use the range to find the sell zone, right? We know that for a fact. What else does the range tell me? Buy low, sell high, avoid the middle. What else do we know? We also know the amount of the move below the range, very similar to a measured move, if you will, right? Or a symmetry. Right? The amount of the move below the range, I call these pendulum swings, by the way, right? Remember, what's a range? A range is a balanced market, right? A range is a balanced market. So if we understand how a balance would be, whatever the distance is we go below the range, when we snap back into the range, imagine a pendulum, right? Imagine one of those, you know what I mean, right? You got one of those, I don't know what they are, right? Like a metal ball, right, on a stick like that, right? They swing back and forth, right? It's a pendulum, right? So now imagine that same thing right here, right? It's a pendulum flipped on its side. So it swings down. When it swings back into that range, does the pendulum stop there? No, right? That momentum now will swing back, you got it, in the opposite side. So I measure the amount of the move below the range, put it back at the top there, and that gives me kind of the target now for where these buyers are trying to go. Okay, we call this range rotation or a pendulum swing, right, in our trade room. So the range is very, very effective right now. We also know we've got that 1, 2, 3, right? We know we have that reversal. Buyers have already bought off of that low. We know we're bullish. Okay, so what do we want to do in a bull market in the middle of a range? We want to stay the heck out of this middle, that's for sure. And I've got to get a pullback, right? I want that pullback. Now, I mentioned earlier, this is a very specific type of channel, right? It's a spike into a channel, right? Now, we learned this last night on the newsletter. What do spike in channels tell us to do? Wait for a deep pullback, right? Spike in channels love to give you these really deep pullbacks, right? We talked about this last night on oil, right? We get that big deep pullback on oil before it ran higher this afternoon. That is all because of that spike in channel that we talked about in last night's newsletter. So I want to be a buyer, right? And I want to use that spike in channel. So this really comes into play, right? That spike in channel really seems to fit well with the overall plan here. Okay, I want to buy a pullback. What are some ways to buy a pullback right now? Couple ways, right? Two-legged pullback, 1, 2, down, draw that trend line, up and over and go. Okay, that one can be a little bit tricky sometimes, so make sure you draw that trend line off those highs. Okay, we'll talk more about that in our classroom sessions, obviously. That's one way to do it. Or maybe we shoot lower, moving average comes over, right? Sellers try to sell into it. Remember, stay away from the range, though. Stay out of the range, right? And we're buying into stops, we're buying the pullback, and we're making sure that we're buying below the range, below the range. Okay, good example right back here. Look at this example right back here. Look what happens. We go down, we pull back, and look, see how that one failed? It's not a surprise that that one right there failed because it's right in the middle of the range. That's what I mean when I say stay out of that middle. Okay, you're going to see lots of patterns that look like this, but there's a very big difference between that pattern, right? That pattern and a pattern like this. Right? There's a very big difference here. There's a lot more profit potential built in to the pattern on the right, right? This pattern over here is a much better pattern, right? That failure and that pullback puts you in before you get back into that range. Okay, so make sure when you're seeing a range like this, and again, this is one of the big advantages of being with us in our trade room because I'm not going to let you fall for those traps. I've made that mistake probably 3 or 4 too many times in my career. I won't lie, right? I had a very difficult time early in my career because as you probably have noticed, it's difficult to learn this stuff on your own. You know, if you don't know better, you don't really do very well with it. It wasn't until I actually hired my own trading coach, this is 15 years ago, that I finally started to get the traction, right, that I needed in my career. And that's why I like teaching so much because for me, it was such a struggle when I first started. And I had to beg somebody to teach me this stuff, right? This is way back before YouTube. Now you guys have the benefit of being able to tune into me every evening and join me in a trade room every day. It's like you're right there with me in the office, right? The good old days, back when I first started, man, the computer was the size of my closet, right? There was no trade rooms. There wasn't any chat rooms back then either. So definitely have the advantage now because you can do this with me in the trade room. Now, what if price goes higher here? So we know where the market's trying to go, right? We know where it's trying to go. What are some ways I could get there? First of all, strong move up, 2 try breakout, 1, 2, trap and go. What I'd like to do is incorporate that off that trend line too, right? Get in off some support level there. The key to that setup though is going to be you've got to do it quick, right? You don't want to do it once we get to the top, right? You want to go up and then, big strong move up, 1, 2, trap, right? Find that trend line and you're buying off that trend line. The key to this is going to be that momentum is going to be so strong that the buyers will have a shot there, right? They will have that shot there. Just remember though, if we go up and then start consolidating here, this is where we start to see that failure back in, right? We go up, the buyers try once, the buyers try twice, and we sink back down into that trading range. Or we go up, we pull back, and we go. If we see this thing jump above the top of that pendulum swing, great, let's buy this, but let's not buy high. Let's just be smart about this. Let's buy low, right? We'll buy that sweet spot instead, right? That 1, 2, 3 breakout into that hidden channel pullback. Now, I've talked about these breakouts to the upside today so far, but could this happen to the downside? Absolutely. Right? So if we end up going sideways in here, we make a run 1, 2, 3, and we break down, that's perfectly fine too. Right? Just a lot of these right now are bullish in nature, right? Or at least a little bit more bullish than bearish, which is why I'm talking about bullish breakouts. But the same thing applies to the downside. Right? Obviously, in this example, though, because we're trying to get that pendulum swing, I would err on the side of being a buyer until we get to that pendulum swing. But once we retest those highs, once we finish off that move going higher, then we can start looking for that sell back down. Right? So up, 1, 2, back down, or, right, strong move up, 1, 2, before we get there, 2 try breakout, or 1, 2, 3, mark up that high, mark up that low, and buying that pullback from there. As I mentioned earlier, gold has potential, right, for a nice big rally going higher here. I doubt we'll get to that 42.9 tomorrow, right? But we might, hey, there's a range up there. We could easily make some damage happen up around that 30 to 35 area there tomorrow. This could be a pretty good run higher here for those bulls. And because we have that PCE number tomorrow morning, that personal income and outlays number, right, that inflation number, it's definitely going to be on our radar tomorrow for a possible big rally higher here. How about some euro? Wrapping up tonight here on the euro. And if you're watching this video still, right, I really appreciate all of your time. That tells me you are a serious trader and committed to your success. And this is why I do these long videos. Everybody tells me the videos are too long, and I tell people, listen, the serious traders out there, they have no problem watching this entire video because they're dedicated. So if you're still watching this right now, you are part of the very small percentile that is willing to put the time and effort in. A lot of people, the reason why they're not successful in trading is because it's a hobby. They dabble with it, right? They're not fully committed. They're not serious about it. They don't treat it like a business, right? One common saying is they treat it like an amateur instead of treating it like a professional, right? Professionals have a job to do, right? Amateurs, I'll do it next week, right? That type of attitude. So if you're still here with me right now, I put the effort in every evening. I know you're putting the effort in right now. It is an absolute pleasure to have you there on the other side, right, of this video. Let's wrap it up right now on the euro. On the euro is about as neutral as you can be right now. What do we know? We know we have a range. What does a range tell me? Buy low. It tells me sell high, and it says stay out of that middle. What else do we know about that range? We know we have a potential triangle. Now, what does a triangle tell me? A triangle tells me that when we get to the finishing point of this triangle, we oftentimes see a very strong break in one direction. Now, because there isn't much of a bias on this chart right now, there was previously, but after 2.5 days of going sideways, it's very difficult to call this a bias market right now. So we know that there is, right, a triangle. We may see it break out on this. These breakouts, most of the time, they're going to come right back into that triangle, right? But I want to warn you about that potential breakout, because that potential breakout does have tendency to confuse people. It always did for me, but that's usually coming at the end of that triangle. What else do we know here right now? We've got that pendulum swing, right? The amount of the move above is the amount of the move below. What else do we know, right? And that creates support down there, right? What else? We know we have one strong leg down. That's a measured move as we go. Now, you could flip that around and say, well, wait a second, Joe. Isn't this a move up, right? Can't we call that a measured move higher? Absolutely, you can as well, right? You definitely can as well. That one's not as dramatic as the most recent bear move down, but that would also be, right, a measured move as well. So measured legs are very, very effective at just kind of giving us a little bit of support and resistance just outside that range. That way we know where we are as we go up, right, and down, above and below that trading range. range. As I mentioned earlier, there really isn't much of a bias right now. There was a slight bearish bias going into the range, but I don't think you can miss the fact, right, that this thing was a hell of a bull market before the range, right? And so we're kind of went up and then kind of settled in here right now. So I would be willing to believe this market goes lower, you're going to see buyers. Market goes higher, you're going to see sellers. I definitely see this as being very much neutral right now, and I think you'll be able to find effectiveness on both sides of the coin here. So what's the best strategy for a neutral market? Well, we know to stay out of the middle, that's for sure, right? Look for the market to make a run for it. Get that moving average coming over, let those bears sort of sell off of it, right? And we're buying into their failure, right? Let the market run higher. Okay, get those buyers now trying to sell, right? Trying to buy into it, sell into those stops. Now, sometimes what happens when we see a range that has a triangle in it, sometimes when the market breaks out, it really breaks out strong. But what does it take to be a true breakout, right? What does a breakout look like? It's not just a strong run. If it was just a strong run, well, then why didn't we break out before? So remember, you've got to go, if we do end up coiling up here, strong move up, it's a 1, 2, 3, right? It's a 1, 2, 3. Mark up that high, mark up that low, and we're buying pullbacks from there. You don't want to chase it as it goes higher because, again, it's neutral. You're going to have sellers waiting up here. You're going to have buyers waiting down here. You don't want to buy high or sell low on this. Same thing goes as we go lower, right? Strong move down. No, you can't sell that right now. You've got to wait for them to show proof. Then, and I know it's not easy, but reversals, breakouts are not easy to predict. They're not, because they break the market down, right? A breakout requires a very, very strong move, and then it's got to hold that move, right? It's not as simple as, oh, just strong move. Again, you've already seen examples of that, right? Strong move, strong move, strong move. Strong moves aren't enough. You have to hold that pullback. And because there really isn't much of a bias right now, you've got to be careful just kind of trying to buy, right, into a two-try breakout. You know, if this market was bullish, right, if we were overall bullish, I would say the same thing I just said, like on the gold, right? Price goes up, 1, 2, trap and go. That's just not going to be as effective in this example because it's not a bull market. There's no bullish tone to it right now. It's very, very balanced, right? It's very balanced. Okay, now if you want to trade something aggressive, strong move up, real strong like this, okay, 1, 2, I'll give you that, right? But trying to be a 1, 2, two-try breakout trader up around that pendulum swing high, not my cup of tea. Not my cup of tea, especially when we know that middle is going to be dragging that price right back in. All right, guys? So buy those lows, sell those highs, wait patiently for those breakouts, right? And again, don't forget tomorrow morning, right? We already know this. The strategy is pretty simple. Buy low, sell high, fade those breakouts, avoid the middle. But a good example, right? Just avoiding the middle. We saw plenty of times this week where we saw some great setups, but they happen right in the middle of that range, and those setups end up failing. That's the advantage of being with me tomorrow in the trade room. I'm going to use my checklist, use my rules to make sure to keep you out of trouble and make sure you're staying confident and consistently profitable as well. So tomorrow morning, 8 o'clock Eastern time, I will see all of our members in the trade room. If you want to get registered, there's a way to get registered right below this video tonight. I'll put all the links in the description of the YouTube video. Grab that link, go to the website at schooloftrade.com, get registered as a new advanced member. And if you have any questions about this, we have flexible payment options. We can do payment plan options on this membership right now, right? Call that toll-free phone number. Use that live support right below my ugly mug, right? If you have any questions there. And maybe you're not ready yet to be a member, but you want to learn more about the trading strategy and you want to get access to our trade room on a free pass. Great. Our free trial is great for you. So grab the free trial. That comes with your free trading course, a free pass to our trade room, hundreds of hours of chart examples of all the setups that we talk about here on this video every evening. And again, one more time, I'm going to remind you, when you register for our free classes, I'm going to email you the first lesson. You got to find that email, click that verification link, check your spam folder. Sometimes those emails get stuck in that spam filter somehow, right? So if you don't see it, call me in the office if you have any questions, and I'll be there to walk you through every step of the process. Again, tomorrow morning, 8 o'clock Eastern time, and I know I will not be here with you guys next week. If I don't see you guys next week as a client of mine, have a safe holiday. Remember, it's OPEC Monday, Tuesday, right? And then Wednesday, Thursday, Friday is all about the 4th, right? Come back with all your fingers and toes, please, right? Please don't mess around. Please be safe out there with the fiery stuff out there. Have fun with the kids. Have fun with the family. Stay safe around water. Come back and see us again soon. We'll be back with our newsletter on July 8th, the first Monday, right after that holiday. Rest up, refresh. I'll see you tomorrow morning at the opening bell. If not, come back and see us again next time. As always, my name is Joseph. Be well out there, be nice to each other, and be here next time. Adios, amigos. Bye-bye for now.